Morning, Steve here in Chicago with the morning grain comments. Well, yesterday we saw an escalation of the tariff wars between the United States and China. It seems like most of the markets financially kind of pushed it aside and thought maybe the worst is over and that maybe there will be a resolution. But for the grains, the funds were pretty heavy sellers in the grains except for the wheat. And so overnight we have a little bit of a bounce led by wheat. Corn's unchanged while beans up a little bit. As far as news overnight, there was a meeting yesterday in Kansas City in which a panel was talking about China's need for beans. One analyst says that when you look at the numbers, China's eventually going to have to buy U.S. beans. But there was a Chinese person there who spoke and said that one of the things that China might try to do is cool down their ration. Right now they have 20% of their feed ration hogs in meal. They could reduce that to 12%, which is the U.S. average, and it would equate to a reduction of about 27 million tons of soybean imports per year. So anyway, it brings back some of the reality of what the rippling effect of a trade war between U.S. and China could eventually do as far as down the road U.S. Soybean production needs. We also had a private group come out yesterday and with their first estimate of 2019 U.S. acres. They said corn plantings would be 93 million acres versus this year 89. They also said that soybean acres could be close to 82 million acres versus almost 90 this year, and wheat acres all told about 50 million acres versus 47.5 this year. So a shift away from soybeans to corn and wheat is imminent. Even with the drop in bean acres, you're still looking at probably a carryout around 850 because maybe lower demand for exports and the bigger carry-in. But for corn, this could add 600 million bushels to the 19 crop and increase the carryout over 2 billion bushels. So it makes DEES 19 corn futures look a little expensive at this time if the farmers do the switch. We also noted that in a tender activity yesterday, some wheat sales were done to Egypt, and the prices were higher than they were last week, and they paid a premium for those wheat. There is some thought process that in December, Russia may no longer offer wheat for export, and you kind of need to get to that point in order to find a bottom in the wheat prices and a rally. We also note that the devastation weather in Australia again has taken additional toll on the Australian wheat crop and bring it down maybe as low as 15 million tons and reducing the amount of wheat that they might be able to export. So again, funds have reduced to their long in wheat to an even position, makes it in a better location as far as maybe a bounce. The funds right now are short 144,000 corn going into the harvest. That puts the corn market maybe in a position for a bounce after harvest in covering some of those short positions, and they're short 77,000 beans. And some people think that on one hand they could add to that short because of the increased global supply, but on the other hand, if down the road there's a resolution to the Chinese trade issue, soybean futures, by some analysts' thought process, could rally $1. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.